So we're a little bit lower this morning. We continue to see compression and volatility. To zoom out a little bit to see that narrower, and then just the last few days above 268 in very tight ranges. So yesterday we had a dropout right on the open to 269.90, and the high was 271.30. It's about 0.5%. So ranges sub 1% again. In my view, a change in the market. You would look for a change in the market if we did something like this and moved down below 269. And then kind of my antenna would go up for something bigger. The reason I say that is every time we have bounced since first week in February, we got up to fairly obvious resistance areas. Things looked fine. And then we had a pretty decent down move below recent support, and then all hell broke loose. So the fact that it's already happened 3 or 4 times already would put me on the lookout for that again. But until it happens, until that actually triggers, because the up move started to become very predictable about a week ago, and because it filled the gap, and all the things happened that you would expect, and there's been this large compression of volatility, except for that weirdness around 10 o'clock yesterday. But even then, the VIX reverted and went to the pre-market lows. Buyers are in control. And so earnings season's starting to kick in. Things are going to get really busy next week. And we'll see how things react overall as the numbers start pouring in. This morning, we're down a little bit. In the after hours, we're like 270.70. We're now to 269.80. You want to look to see if obviously the market's bought right here. If it's not, then the next support is where the up move started from a couple of days ago, around 269.40. And again, I'm compressing levels. A couple of weeks ago, next support would be like 80 cents lower, $1.20 lower. Now it's, you have to think in smaller terms because of this compression. Very tight range the last couple of days. If we hold, if we come in here, we hold this area right here, and then the market starts to hold above, let's say 270.35, and you start to look for the move back up to 270.75, 271. The same thing applies on the upside, just compression and volatility. So IWM failed above 158. It did get above the level we talked about yesterday, which is around 158.15. You can see it the first time it actually got there right in the morning. If you shorted, it did come off about 35 cents. Made a new high. In this situation, just as a general trading principle, whether you're trading the market or a stock, if you have a really good resistance level, and then you see that the buyers are still in control, it's really not pulling back much, and takes out the new high, you look for something like this red bar where it gets back below this. And then if it starts to move sideways a little bit, you can short against this here. And then you can hold a little bit above the high of the day, but ideally you'd like to see it hold below the longer term resistance. In this case, it came off about 80 cents or so. It's not bad. So looking at it today, yesterday's low. So it's certainly showing a little bit of relative strength to the SPYs. It's above yesterday's low. I would call this support, potential support for the open, 157 to 157.20-ish. All right, so let's get into the fresh stuff. AXP. So AXP, I was actually on the desk when they reported after hours. The numbers look good. It held that gap. Here's what it looks like on the daily. So it's in a pretty good uptrend. That's the February sell-off. Took out this October support. And it tested the October support again in March. This is where it gets kind of messy. I think it's gapping above 96, so it gets into this kind of messy area. Recent pivot high is 99.5. It's basically 99.5 to 100. It's in this logical up area if it's very strong on the open and if it's bought. Looks like, is that real there? No, it's not real. So there was a rogue print. I'm not sure how that happened up there, but that's it's topped out in the pre-market, hasn't gotten above 99. So on the open, if it's pretty strong, as it's shallow pullback and when they start to buy it, this is the likely target area. Let me just go through quickly 2 or 3 other quick patterns. We got a lot to cover. So another thing could be it could just come up to pre-market high, fail there, come down to after-hour support here. Just based on the numbers and the chatter about it, I would think that if you could get long here, this is a very good risk reward, for at least a move back up to, let's say, 98.5, 99. So I like that a lot. If it comes into this area here and just can't rally above 98, starts to roll over, and you want to be short it, because you think it can, I don't know if it can gap fill, but maybe take out the lows, something like that. But I lean towards it's going to be pretty strong, but it's coming into some longer term resistance, so that could give us a pretty good operating range. $3 range today gives us basically this area here to the top of this resistance. And I think that's not an unreasonable starting position before we see what happens on the open. The next one is AA, which thankfully did a reverse split, which now gives us some better price action to deal with. I was a little flabbergasted by the amount that it moved coming into earnings. If we go back to the beginning of April, it was a $44 stock. Started to trend higher and move sideways for a few days and trended higher. So this thing was bought very aggressively into earnings, and it seems like the people who did that were right. But 44 to 62 is over a 40% move, right? So 40% move coming into earnings, it's a lot, You're going to have really have some people step in to support this and not have a gap fill, at least down to 60. Right now, it's holding the steep uptrend. Let's go to the 5-minute. So here's initial reaction. Took it actually above 62.5. See, it was pretty wild. Came down to 61.20. It just tested that in the pre-market here, it looks like. What did I put on the sheet for resistance? None. Okay. Based on the pre-market action, 62, and then 62.5. And so 62 would be because it failed here again. It's come off, doesn't make a lower high. And if it does make a lower high, you can play it on a short back down to support again and see how it behaves. If it slices right through, then I would look for a play all the way back down to 60, 50 to 60, something like that. On the open, first move is up, and it goes through 62.5, and then has a pullback and can't come below 62. Then fine, stick with it on the long side. There, and then technically no longer term resistance. Next one is SMBR. This is not a stock I'm really familiar with. It trades 500,000 shares a day. The numbers looked okay and the longer term guidance looked okay, but then when they had their conference call, they brought down their margin. Basically this year earlier, they had said they were going to have margin expansion, which may have been a large part of what drove the stock from 25 to 40. And they basically just said, no, sorry, we're not going to have margin expansion. And so the market is not treated that particularly well. Just want to see. So it went from, so a year ago it was $26, went to 40, it's 14, subtract 7. So that's here. It's gapping below this. So it already had 50% retracement. In November, it had a huge move, which started at 31. And that day it got to 33. So that's where we are right now. So I would use 31 as an inflection. If it touches here, can't get much below, and they start to buy it, bid it up, and it steps up above 31.50, you can play it for a bounce back up to kind of where it initially reacted to after the conference call. See, it came down to 32, it bounced back up to 33. So this would be the area that I would target if it starts to hold above 31.50 after bottoming right here. If first move is down and it can't get back above 31, and you want to play it on the short side for a move to 29.30, that's fine. On a high volume day, it can do, I see it did 2.5 million. On a big up day, it did over 5 million. So it definitely can do a large multiple. You know, it could be a little bit wild because it normally only trades 500,000, but thinking it can trade 3 to 5 million shares today that sounds about right to me. It just hasn't done much in the pre-market. Next one is Philip Morris PM. They're on a conference call right now. This one is in I think it's a bigger picture downtrend. Yeah, well, I would say it's like kind of the opposite of some of the stocks we've been looking at recently, which had big up moves and then sideways. This down move has been wild. It's kind of an expanding channel. Most recent down on the channel was 96, and that's kind of where we are. So this has opened up. I mean, there's some more downside here. What was the? So they raised guidance, right? So it looked like they raised guidance, but if not for the tax cut, they maybe would have lowered guidance. I didn't have enough time to drill down into it, but it seemed like that might be the case. It would explain why it's gapping down after raising guidance, and it's already a beaten down stock. So I think that's probably right. We'll know very quickly if that's not the case. It'll just immediately get scooped up on the open and just probably go straight back up to $9,900. But if it can't really rally above 98, yeah. So I put the resistance is up here, and then like support, right? It's below the first support already in the pre-market, and the next one is 96. So you can see that very clearly here. So that's, you know, if they start selling it on the open, we should see a flush into this area right here. We go back to March 23rd. That was probably the day the market got crushed. Got down to below 96. But this is going to be the key area. And again, if this holds, you know, playing in for a bounce back up, something like this is fine. But unless like first move is up, and it gets, you know, immediately like into this area here, I'm not really thinking about it working its way back up to recent support, which was 100. But it's a very thick stock, so this it's a higher price stock, but it normally trades 5 million, so it should trade 10 to 15 million shares today. So I think you could trade this, even a less experienced trader. Just be a little bit careful on the open. So second day is plays. So TXT didn't make any trades in this yesterday. It did hold a large gap. Bought some upgrades today. I wanted to point out that there really is no overhead resistance. If right on the open, you had the opportunity to buy it below 64.40 against 64 for potential move up to 65.5, 66. That would be a pretty good trade to risk a little bit on. The next one is Morgan Stanley. So Morgan Stanley, if you go back to the morning game plan notes yesterday, it was the number one idea we discussed. It did fail exactly at the level we highlighted. The thing that was different about it, though, than the other financials that reported recently, is it popped there at 10 a.m., which was a little bit unusual, which got me thinking that maybe it wouldn't completely reverse, although it eventually did like an hour later. So I was more aggressive covering it back down to 54 than if it had just popped right on the open. So I think that thought process is probably justified. Obviously, it worked out that it traded all the way down to support one. But this was an example. If you just shorted it into the resistance as we had outlined in the game plan, it had your stop above 55, 55.10, and traded it for move back down to pre-market support. You were never really out of the money. It came in quite a bit. If we look at the rest of the day, it had come down to that support. I did get long here, pretty sure. Sold it while off the desk, I think, into this. It did come back down again, so it's acting pretty weak. And this is pretty good support here. That's why I did buy when I came back to the desk in the afternoon. Had held here like 3-4 days. I mean, it was accumulated in a 3-day period like 4 or 5 times. So until it really breaks below 52.80 and holds below there, it's not a good risk reward short in this area. In fact, you can just see like it had like this is it's almost a dollar pop off of 53 before it melted into the close again. And you can see how wild up and down the moves are, and that's why I've said this a million times, and if you're newer, I'll say it again. When something has a very well-established range, making trades in the middle of that range is just deadly, because the price action, literally, it could just go straight up to the top of the range or it could drop out to the bottom of the range. You really want to look to fade at both parts of the range, and then you can trade directionally if it shows strength or weakness through the range. The next one is IBM. IBM, I still have a few shares. So I tried buying it to S2 on the open. It didn't work. I got stopped out, which was here. I tried buying it to, I think, 150. It got back above. It failed. I got out. And then at the end of the day, on the 30-minute, I found 148.30s. I think in the last couple of weeks, maybe, or it was being bought in the 148.30s. So I bought 148.35. And when it popped back up to 149, I sold half my shares, and now I still have some shares basically on market 148.35. So the way I'm looking at it today is if it gets below 148, it's weak. Definitely want to have an alert at 148.35. If it gets above 149.20, you want to play it for move back up to 150 and then kind of see what happens. I think it's overdone, but if you look on the daily, this 148 to 149, it stopped here a few times in late March when the market was weak. Definitely the February, obviously on the February low day, it did spike all the way down a few more dollars from there. It's a pretty good area, support area. And then finally LRCX. So I think everyone played it on the open against that 197 level we identified. It was not easy. In fact, if we zoom in on it, we can see, so I put it right on the open here. It popped back up from the 197 to 198.5. Thought I had it. I really was watching Tesla though. And then it made a new low, which got me to sell most of my shares. And then it had the $5 bounce. So I just didn't find a spot to get back in. So I still had a few shares. I sold most of those when it popped back up to 202. And now I just have a couple of shares to watch it. So if we look at it this morning, it's gapping down, I think, with some other semiconductors. So you can still look at this one. What I put in the sheet, 197. I mean, this area here is still where you want to look. You still want to buy it here. It's really $1.50 of risk. Yesterday it got to 204 at the close, so it did eventually get $7 above there. Let's take a quick look at the daily for you on this. I do think even if it doesn't bounce off those levels again and continues like lower, maybe work its way into this support area, I think bigger picture, longer term, this stock will go above the high. So it's worth continuing to watch. just a wild consolidation after a big up move. So yeah, if it takes out that 196.5, 197 support, the next kind of support, it's messy, but it's basically it's the low 190s. It's like 190 to 193.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.